I mean, that's, it's hard to say that everything is going to change at the same time. I think what we're going to see is different lenders, as we got to figure out how bad this is first. Some people have said that this is going to it's going to create a short recession with kind of a hard V recovery. We're going to go down real hard and then come back real fast. If that happens, then things will probably normalize in 3-4 months. But if people start losing their jobs and home prices start falling and people get laid off, in other words, if it's kind of the worst case scenario, I don't see, just think about common sense, right? I don't see anybody wanting to invest money into mortgage-backed securities, given the fact that that investment might default in the future. So it's going to happen lender by lender, is I guess my answer.
For sure. And don't you think a huge part of what the government's doing with the 7A and 7B programs out there, don't you think a huge part of that is making sure that that Americans keep jobs or get their job back and keep their homes and all that? Like, don't you think that's
part of their goal? It's the paramount priority. And that's why it's a little frustrating that the government's said they were going to roll this out Friday, and now we're into the weekend and it still hasn't been rolled out because they're putting it in the bank's hands. But yeah, that's very, very important, the PPP for small businesses, because that should save, literally millions of jobs. But if that doesn't come off the right way, if that doesn't happen the right way, and the money doesn't flow to the small businesses, the dry cleaners, the bakers, the small restaurants and bars, those people are not going to have a business. They don't have much longer. They don't have much runway left of cash reserves that they can use to pay their people so they can pay rent and keep the lights on. So I think that's a good leading indicator, Danny. If we see that the PPP goes off well and there's a lot of businesses where the money is actually getting to them, I feel like that'll stimulate the economy faster and we'll get out of this faster. But if that drags on and we see tremendous job loss, or if we see a significant spike in unemployment, this could take well into 2021 to recover. But who knows? Worst case scenario or best case? I don't think anybody knows.
Well said.
Awesome. Thanks for the follow-up question, Danny. That was great. Okay, so I have one last question before we open it up to your guys' questions, and thank you for continuing to throw them in here. We're writing them all down and we're going to get them taken care of in order. My last question here before it's up to you guys is for Chandler. Chandler, so what do you think all these people here, what do we have now? 71 participants, which is awesome. What do you think all these people tuned in to hear about today?
I think they were hoping I was going to give them an answer when the virus is going to end, but unfortunately I can't do that. What I can do is, I think a lot of people are thinking the last time the housing market shifted, it was the worst shift in 100 years. Is this happening again already only 10 years later? And what I can tell you from looking through data, I don't see the similarities just yet. Now, it is going to determine how long this virus lasts, how much economic impact it does have on our economy. But from looking at it, where we're at right now, we have under 3 months of home supplies. So we've cut off how many homes are coming onto the market. It's going to take 3 months to sell out the market. Our supply is very low right now. If you look back in 2007, heading into 2008, we were at nearly 20 months of supply. We were oversupplied going into 2007, whereas right now, as anyone who's been in the market the last couple years, we've been tight on inventory. Another point to make, going into 2007, that was a financial crisis. We were giving out faulty loans. We had the mortgage industry crumbling. This is a health crisis that has turned into an economic crisis. So you're seeing two different things as to what 2007 and what 2008 looked like as compared to right now. My last point is, and Tom touched on it earlier, you're seeing 30-year fixed interest rates still at almost all-time lows. You're in the 3.5% to 4% range on a lot of these loans right now. In the 2007 to 2008 period, we were hovering around 6%. So it's still a very affordable time, and this gives me reason to believe right now today that it won't be a prolonged recession or hit on the market. However, that is all going to depend on how quickly this virus is contained and we get back into normal life.
Awesome. Great response, Chandler. Thank you so much. Okay, so I want to open it up. We have our first question from Rosie. This question is going to go to Dave. And her question is now the time to put a home on the market, or should we wait a month or two? They're trying to get, of course, the best price for their home. What do you think, Dave?
Rosie, great question. I would say that right now is absolutely the best time, and the reason being is I'm going to share a screen with you guys real quick. I wanted to share with you guys a couple of graphs that I look at. Just give me 1 second here while I get this pulled up. So the first graph we're going to look at is our sales price. So we're going to go median sales price. So this is a 10-year look back. Back in 2010, the median sales price for the entire MLS was $64,000, right? So we can see that this has continually gone up year after year after year. And let's go up to January of 2020. We were looking at a median sales price of 180. So the highest it's been in the last 10 years, okay? The second graph that I like to keep my eye on is the months of supply. And we're going to see the inverse of that first graph. Back, like Chandler mentioned, back in 10 years ago, it was actually about 9 months of supply. Right now, we're sitting at just over 3.1 months of supply. So if I'm a seller looking to sell my house, I want the lowest amount of competition, meaning the fewest amount of homes on the market while the prices are the highest. The median sales price is showing us right now that $180,000 is the highest it's been in the last 10 years. I think right now is a great time to sell.
Awesome. Great response, Dave. Okay, so next question is for Danny, and I'm just going to keep firing away at these because we have lots of questions coming in, and I want to make sure we get to all of them. So, Danny, question is from Hillary. Hillary, if you want to give us a wave. She says, I lost my renter due to the virus, so she must be a landlord. Should we hold out and wait for another renter or sell if it's still a good time to sell? We're planning on selling April 2021 anyway. We just don't want to put it on the market with what's going on and lose out on some money. I think your answer is going to be similar to what Dave just said, but can you talk specifically to Hillary as a landlord?
Absolutely. So Hillary, I guess my first question is, do you want to receive rental income for another year? Because the demand for rentals is there. If they're priced right, we throw them on the market, and we typically have several applications very fast, and you can pick the best candidate to lease out your home. If you want to capitalize on what we know is basically the peak pricing we've ever seen right now, I'd recommend getting it going sooner rather than later. Typically, like in any investment, there's the whole herd mentality. So right now, most people aren't selling their home. So the people that do decide to sell their home can take advantage of it and really take advantage of the opportunity. Once you start to see a lot of people listing their homes, I truly deep down believe, in my prediction on what's going to happen is you're going to see a surge in inventory once this is all lifted. And I don't say that in a bad way, but I just believe you're going to see a ton of homes hit the market month over month over month. It's for a while, I think the demand is so high, right? So eventually, like right now, you have all demand and no supply. So it's going to take a while for supply and demand to balance out to get to an equilibrium point. At some point in time here, once the virus is behind us and we're able to operate business like normal, you're going to see supply outweigh demand, which will naturally start to drive prices down. No one knows when that's going to happen and at what speed. But right now, we know that prices are still at their peak. Hillary, we could always talk after too, just to dig in a little bit more on your specific property, get you a market analysis on what it would sell for today and what virtual strategies we would use. I hope that answers the question.
Awesome. Thank you, Danny. Next question, very similar. This question's for Tom. It's a two-part question. So I think, Danny, you kind of answered the first part of this. But we'll have Tom touch on it really quickly as well and then answer the rest. So Tom, this question is from Justin and Kaylee, if you guys want to give us a little bit. So question is, what are the expectations on inventory in the upcoming months? So Danny did touch on that, but they said, I can't imagine having strangers in my home during all of this, and we were planning on listing this month. Also, here's the second part that I think you're going to want to focus on is the current inventory is highly overpriced. Will this current level out the pricing, or are we going to see large drops in all homes?
Got it. So I'm a mortgage guy, and I understand the supply and demand economics. It's really just a supply and demand question, you know. Current inventory is highly overpriced. Will these current levels level out? Yes, absolutely they will. You know, let's not forget that even when there's a crisis like this, the economy is always a cycle, right? Always going up and down. The home prices are always going to run in a cycle. Some cycles are more pronounced down and both pronounced up. So yes, prices will normalize again, but there's got to be a catalyst there, right? There's got to be something's got to happen for all of these homes to come to the market, because again, supply and demand, we've got a plethora of buyers. If you got a decent house and it's priced decent, you're going to have a buyer. You're going to have a buyer in probably a day or two. So being so constricted like that, that's got to change first. For prices to go down, the buyers have to go away. There has to be less buyers and more product, more houses out there. So to answer your question, yes, it will change. I know you're probably looking for a win, and I can't tell you when. I don't think, you know, anybody that's being completely honest can tell you when. So I don't know. That's a tough question, but yes, they are going to change. And you know, I understand the question about. I think what Justin and Kaylee are getting to is the house that they put up on the market. They know they can sell it, right? Because we got a bunch of buyers. What happens when they put their house up on the market? Boom, we got a buyer, and now Justin and Kaylee don't have anywhere to move to because they haven't found a new house yet, right? I think that's probably part of the problem. And quite honestly, I'm a mortgage guy. I'm going to probably kick that over to Dave Simovski, just because he's more of a real estate guy, and it could probably answer that question better, kind of. And I think the question is, all right, I get it. It's great. I can list now. Let me put the house up. I don't have a house yet. What happens, Dave?
For sure. So yeah, that's a very, very good question. And we do get that question a lot. I think that's part of the reason that some of our inventory levels have been lower, is just sellers are just concerned about where are they going to go afterwards? How are they going to find their house? And so that's where we can do there's a lot of different things that we can do creatively as the listing agent on the property. We can do occupancy, where we give you some time after closing in the home, and it's up to us to get you, to negotiate the best terms for you on your contract. We can put in different types of contingencies into the contract. One of them being called a reverse contingency, where we can make the sale of your home contingent upon finding your next home, right? That's one of the ones that we've had a lot of success with. And that protects you as the seller so that you're not homeless. So again, it's going to depend on your specific situation, what you have going on. But in most cases, we can find a way to keep you in your current home until the time comes where we find you the next.
So Justin and Kaylee, because you're my clients and I know your situation as well, like that contingency piece would be a good option for you guys, because you wouldn't be forced to sell your home and settle on your next house, but you could give yourselves the option. If you didn't find that next property, you wouldn't have to move and sell your house, and you'd have no financial loss. And just to be clear, like that clause only works in a strong seller's market. Once we shift to a buyer's market, that clause will become, it won't even be a part of the market, because there will be so many good homes for sale, you wouldn't want to put all your eggs in one basket on a home that is contingent on that seller finding their next house.
That makes sense. Great tag team, guys. I think hopefully you answered that perfectly. I think you covered all bases there. So the next question I have here is for Chandler. I'm a little confused at the question. So it's Jeremy and Debbie Smith. If you guys want to unmute yourself, I just want to get a little clarification. So your question is, has anyone pushed back on being able to put up signs on the homes whose listings have gone live? What I think you're asking is about the restrictions of being able to put in signs at new listings. But if you could unmute yourself really quickly and give us a little clarification for Chandler to adequately answer your question, I think that would be helpful.
Can you hear me?
We can hear you, yes.
Oh, hi. So the question is, our house, we were supposed to have our sign put up and our photographer here the morning after the governor ordered that. So we didn't have a photographer and our sign is not in our yard, but our listing went live. So now all our neighbors with the cars driving by slowly while the children are out think we live on a street with a bunch of new predators.
Okay, so Chandler, does that make sense for you?
Yes. So,
Okay, awesome.
yeah, what I'm hearing, you know, when you list your home right now, can we put a sign in the yard? Can we get pictures? Unfortunately, right now we cannot. Those are both deemed non-essential. So our sign installer is not an essential job. He cannot go out, put signs in the yards. Unfortunately, we cannot get our photographer into homes. What we have been doing is urging our sellers, if they're comfortable with it, take a video of their home, send a virtual tour of their home. We can still get it live and active on the market because people are still looking. I have a listing that's live on the market right now. We've gotten over 450 views just on Zillow alone this week. So to answer your question, no, we can't physically do anything to go in
Henry,
or around your house right
I
now.
hope you, when you go into the door, you put on your mask and stuff. I hope you're doing that.
We're not going to the doors right now. We're not stepping on sellers' premises right now. We're not
I hope when you
installing
go
signs.
into
We're
the
not
door, you're
taking
putting on your
photos
mask
right
and
now.
stuff.
We're
I
doing
hope you're
everything virtually.
talking to people. Okay, well, you should. Whenever you open that door, you need to have it on.
Absolutely. Thank you, Chandler. Yeah, what Chandler's saying is it's mandated that we cannot go on any seller's property right now. So we're trying to stick with the guidelines that the state has put in place. So
Well, just hold on one second, because I have a follow-up. Across this, excuse me, across the street, they sold their house. And after the order went into place, the sign company came and removed their sign. So I'm just wondering why some signs can be removed, but some signs cannot be placed.
go ahead, Chandler. Or Danny, go ahead.
So at REALTEAM Real Estate, we've taken a strong stance on doing everything that we possibly can to make sure that we are not doing anything to spread this virus. So we have a stay-at-home order in place, and that is our company policy. So we aren't going to homes. We aren't putting signs in ground. We're not going to put our people at risk or our clients or just the community in general. So for that reason, we've just made it very black and white, where we're not going to go against the governor's order.
Exactly. Thank you, Danny and Chandler. I'm going to move on to the next question. We're actually going to jump to Tom on this one because it is a mortgage related question. This is from Carly. Carly, if you want to give us a wave. It says, I saw that FHA credit qualifications raised a little. Do you think that will keep the real estate market stable? Great question.
So I think I understand your question, and you can unmute and clarify if you want, but you're saying that you saw the credit expectations raise and you're wondering if that'll help stabilize the market. Is that right?
Well, I've been following along, and I'm actually a business major as well. So I've been in all these statistics and learning about everything that happened in 07 and 08.
Mm-hmm.
And I agree with you completely saying, that was a mortgage-backed security problem where the ratings were being rated good when they weren't good mortgages, where we're not seeing that now. We're seeing a pandemic, an epidemic of a virus that is uncontrollable. And to stop some haphazardness in the real estate market, I see lenders raising their, their qualifications for FHA buyers so they do not, become delinquent on their mortgages by raising the mortgages and making sure they're, more qualified, I guess you would say, to purchase.
Gotcha.
I think that's going to keep us more stable. And again, as well as the fact that people are quote unquote losing their jobs right now and may not be able to grab a mortgage at this time. Is it going hand in hand or is it helping us?
It's a good question. No, I understand what you're asking now. So you're 100% correct in the fact that I have seen new overlays come out, especially for all government loans. Just, 620 used to kind of be the magic number for FHA. Now there's some lenders that won't do any FHA loan unless it's over 680. So that, yes, a higher credit score borrower or client has, less likelihood to default in the future. But I don't think that's really what they're after by, adding these overlays. What they're really doing is they're feeling the liquidity crunch, right? And there's no real market out there for FHA mortgage-backed securities currently. Nobody wants to touch those. It's like a bad stock, right? Because right now, at where we are right now, no one knows what's going to happen. So since they don't want to touch, the people that invest money to create mortgages, if they don't want to buy into the FHA programs because they're fearful that they're more likely to default, what's happening is those overlays, those increased requirements, is really just a function of liquidity. What they're doing is they're trying to tighten the faucet, the flow of water, right? They had all this money flowing out. They don't want to put as much money out. So now they're trying to shrink.
Flowing out. Yeah. Okay. I get what you're saying.
So that's really why we're seeing the credit guidelines go up and the massive upfront costs go up as well. So I think that's a great question. And I'm glad you asked.
Awesome. Great response, Tom. Thank you. So real quick, someone asked a follow-up question to the signs. They just asked if a homeowner could take down the sign themselves. And of course, if you want to take down the sign, pull it out of your yard and stick it next to the garage or wherever so that we can have access to pick it up once we are allowed to come back out to people's homes, that would be perfectly fine. So I'm going to move on to another question. This is from Justin and Kaylee for Danny. The question is, for those of us who did plan to sell or buy this spring and summer, with how everything is going and anticipating long-term economic issues or concerns, would it make sense to instead refinance with the current mortgages lower, or the current mortgage rates lower, and see how the market conditions level out later this year or next year? So basically asking, should we refinance or should we sell?
So Justin and Kaylee, what I'd recommend to you and everybody right now is just, you want to have a consultation and identify what your options are. You guys probably have 3 or 4 options on what you could do and different timelines and, how you want to play your chips here. We should talk, just see what kind of game plan you guys want to have, and then just take it from there. Because depending on your wants and needs, it's going to vary on the best play for you.
Hey, Danny, let me jump in on that one real quick. When you're considering the refi or sell route, and I saw your question, Justin and Kaylee, and I think you mentioned a rate somewhere around 4.5 currently, and does it make sense to refi? I think the question was, does it make sense to refi if I'm going to move in 12 months? And just to bluntly answer your question, in your situation, I probably would not refinance. If you know for sure, right, that you're going to sell in 12 months, even going to a rate of, let's say we were at 2.5%, you're not going to recoup your costs fast enough to make that refinance pay off for you financially. So I would say, do not refi right now. If you know 100% you're going to sell in 12 months. Now, if you're questionable about selling, that's where you want to talk to a lender to see if maybe there's a very low cost option for you that covers most of your closing costs. The problem with that is, now we're talking about rates that are probably close to where you're at in order to get that. So good question though.
Awesome, thank you. I have another question for you, Tom, actually. What are your expectations for the new build market over the next year, given the situation?
It's a good question. It's again, let me look into the crystal ball here and see what comes out. I have no idea with the new build market. So there's obviously a lot of projects. There's a lot of basements being dug, a lot of homes in the process of being built. That's going to add inventory. That's going to help. And as long as someone that's going to buy a new home has the ability to put down, a decent amount of money, I'm saying like over 10% down, I don't think you're going to have a problem. I think it's probably going to be business as usual. If you can find the house, you'll be able to get the financing. Now, I think what you're going to see go away, and it's going to be a lot more difficult, is trying to qualify for a mortgage with less, qualify for a mortgage without putting a lot down. So I think you're going to see new construction, you're probably going to have to put more money down.
Okay. Awesome, Tom. Thank you. The next question was from Rosie and is very similar, so we'll keep it a brief response. Chandler, Rosie asked, same thing about new construction. She has a lot in a plan and was getting some builder quotes currently. It's all come to a standstill. Her question is, housing starting to be impacted by all of this?
Yes. In short, it is. I have a couple clients who are going through the new build process right now, and we have been pushed out at least a month. So from all indications and people that I've talked to and building companies that I'm personally working with, they are at a standstill. There's no one on site building, digging, doing finish work, any of that right now. I would contact the builders that you have been in touch with just to kind of see their timelines as to when they can resume again. But in the long and short, Rosie, yes, new construction for the time being, at least until the 13th, is at a standstill as it is a non-essential business.
Okay, great response, Chandler. Thank you. So the next question is for Dave. It's from Elena. What are the restrictions on evictions for tenants whose lease is up, but they don't move out given these corona issues?
All right. So what I'm hearing is you have a tenant in place currently. Their lease has expired, and your question is what are the restrictions on evicting that tenant? So when you have a lease in place, when that lease expires, that tenant becomes a holdover tenant, and unless you notify them within 30 days of you wanting them to leave, they are considered a holdover tenant. They'll continue to lease the property on a month-by-month basis. What I can tell you right now is that a lot of the courts are closed for business. In addition to that, there have been some guidelines put in place federally and at the state level that any tenants in place, there are no evictions. Evictions are put on hold right now for all intents and purposes. So it's going to be a backlog from what I'm hearing. There'll be a backlog of evictions in the court systems, and you're going to have to wait until those restrictions are lifted.
Okay, great response, Dave. Thank you. So the next question is for Danny. Can you tell us a little bit about what it's like to be a buyer right now in this market? What does it look like?
Well, it's a first for all of us because we're doing everything virtually. So to be a buyer right now, if you're a buyer in this market and you find a house online on Zillow or any third-party website that you love, send it over to your agent. And if you do not want to miss out on that home, we are putting clauses in that contract to protect you as the buyer, where your home inspection contingency and your mortgage contingency will not begin until you have a chance to walk through that property. So basically, as a buyer, if you fall in love with a home and you want to buy it, you can lock up a contract with the seller and nothing begins until the stay-at-home is lifted and you can walk through the home without breaking the law in any way.
Awesome, thank you.
I mean, the second part to that is obviously it's lower inventory right now. So unless you absolutely love a home, you probably want to wait for the right home to hit the market. It could happen now, or it could be once this is lifted, but just, keep actively looking like we'd always recommend at any point in time. Look every single day. If you like a home, send it over to your agent right away and let your agent go to work for you.
Awesome. Thank you, Danny. Next question I have here is for Tom. It's from Sydney. The question is regarding interest rates. So how much of a percent decrease in interest rate is worth refinancing right now? Also, do you give a breakdown of refinancing costs versus the average cost of doing the same? Tom, you're mute. Oh, there you go.
Good question. People like to, people love rule of thumbs, right? Just because it's easier to it's like you can put your thinking on autopilot. However, when you try to make a broad rule like that, like, hey, do I need to, how much does the rate need to come down by for me to refinance? I can't answer that. I think it'd be kind of irresponsible to say that there is a rule of thumb, because it's just not the case. There's so many different things, different moving parts that are happening in a human's life that are affected by the mortgage, that maybe just dropping the rate isn't what makes the most sense, right? Maybe what makes the most sense is utilizing some of your equity and paying off credit card debt. Or if you want to do just a straight rate and term refinance, and that's really your only goal, it depends on how long you're going to be in the house, right? So what I do with my clients, when they ask me those questions, I do a very detailed presentation of their current mortgage situation, exactly what it looks like now, and then I compare that to what a new loan would look like given my client's goals. So if the goal is to reduce the rate, yeah, I'll show you, hey, if we go to a 15-year, this is what your new payment would be. This is the total amount of interest you'll pay over the life of the loan. This is how much equity you'll have in 5 years, 10 years, whatever. And I compare that to your current situation. And that usually gives my clients the info that they need to make a good decision whether or not they should refi. It's not really for me to tell you this is a good idea or it's not a good idea. My role in all of this is to consult with you, to understand truly your goals and where you think your financial future is headed, and then make recommendations to you. But ultimately, that's your decision. So, I've had people that have dropped their rate 1/4%, and loved it, and were happy with it, and it saved them, thousands of dollars in the long run. But to answer your question, there's no rule of thumb in my opinion. I would say talk to a lender. And you know what? Lenders don't have to pull your credit to give you an answer. That's a fallacy, and a lot of mortgage people are trying to do that. So just talk to somebody, send them your mortgage statement, and we can make some pretty darn good decisions based off that before you really get down the process.
Awesome. Thank you very much. So, Dave, do you have something to add on the days on market for this?
Yeah, actually, I will share a screen with you guys because that's my favorite thing to do is look at graphs. So if you take a look, this is your, hold on one second. This is your days on market average graph. And this is a 10-year look back. So you can see over time it's continually gone down. The lower the days on market, the faster homes are selling, the greater the chances that that's a great indicator that we're in a very strong seller's market. So right now we're sitting at 42 days on market. It is April 4th. So this goes up to the date through the end of the month. So through March, we're at 42 days on market as an entire MLS. Now that'll change per zip code. So if I change this to, I'm just going to use 48044, which is Macomb Township. We'll probably get a shorter number than the 44 just because I know Macomb is pretty hot. It's 39. So it's just a couple days under the entire MLS. So it just depends on your area, what zip code you reside in. But some areas are hotter than others, that's for sure.
That's perfect. Thank you for sharing, Dave. Those graphs are very helpful. Actually, we had a question coming up about days on market. So hopefully that answered your question on that, Rosie. To the next question, this one's for Chandler. This is from Jennifer. Jennifer, if you want to give us a little wave. Jennifer's question is, has the demand reduced based on the overall fear of what is happening?
Yeah, great question, Jennifer. I think it's tough to gauge right now where it's at. I think it's reasonable to believe that some people are going to hold off until things settle from a health reason. As Tom touched on earlier, it's a liquidity issue with the mortgage companies right now and the banks. So you're going to see that the qualifications need to be stricter on getting a mortgage, which in turn could reduce the demand because A, maybe not as many people are going to qualify, or B, they don't have the extra money that you're going to need to have to get a mortgage or pay for a mortgage right now. So I think it's reasonable to expect that demand could decrease in buyers over the next couple months here. And that could be more because banks are tightening up on lending as opposed to the fear. I can't give you a black or white answer on fear because I don't have any statistics based on what people are feeling just yet with the market. No one has come out and published anything like that yet. But from a mortgage standpoint and a qualification standpoint and tightening on that, yes, I believe you can expect demand in the interim to decrease.
Awesome. Great response, Chandler. So next question is for Dave. So we kind of touched on this, but can you elaborate a little bit more? What about showing homes? How is that being done with the social distancing restrictions? Also, a lot of moving companies have suspended their business, especially to seniors. So even if you do sell your house right now, or you're closing on your house right now, how do you even move at a time like this?
Great question. So as far as showing homes goes, we have been, the real estate industry, we're not allowed to go into homes. We're not allowed to show homes. So what's being done about social distancing restrictions, we're doing a lot of virtual tours, is what I'm hearing. As far as moving companies suspending their business, I believe they fall under logistics and they would be considered an essential service. I have not heard of any companies, moving companies canceling their services. So I'm not quite sure how to answer that part of the question, but as far as I know, they've been deemed essential, unless one of the other panelists can help me out with that. I haven't heard anything to the contrary.
Yeah, I think it's going to be a company by company basis too, Dave, depending on your moving company, because some moving companies are electing not to do business right now to keep their employees safe. So I think you're correct in your assessment of what's essential and not essential, but there's also private business practices that certain companies are taking that may restrict who you can use during this time.
Okay, awesome. Great response. Next question I have is for Danny here. Is there any benefit to, I'm sorry, this is from Jeremy and Debbie. Is there any benefit to a seller to be accepting an offer at this time?
So if you're a seller right now and you have your house up for sale, you obviously have it out there in the market at a current asking price. If you receive an offer that comes in at a number you're satisfied with, I think it always makes sense to accept an offer if the buyer's giving you the price and terms that they want. Because there are buyers out there right now that must move. The people that sold their house and closed, then they're homeless right now, where they have whatever, they may have some occupancy left, or they're relocating in state. We have a lot of that going on right now. Those buyers must move. So if we get a strong offer as a seller, it makes sense to accept the offer. If it's well under asking price and you're priced close to market value, of course it would not make sense to accept the offer. So again, case by case, as long as you have a professional in your corner guiding you and giving you sound advice, I would lean on them to give you the right answer.
Awesome. That's a great response. Tom, next question that we have here, we have a couple left. What happens when people stop making their mortgage payments? What happens to the mortgage industry as a whole if so many people are deferring their mortgage payments currently?
So that's a good question. And I'm guessing you're talking about like kind of the forbearance ideas that have been floated out there. The first thing I'll say, and if this had flashing sirens, I'd put it on both sides. Don't stop making your mortgage payment right now. Do not do that. That will get you in trouble. Now, what you can do is if you're experiencing, financial hardship because of this, definitely reach out to your servicer of your mortgage and ask them what the process is to apply for forbearance. So it's something that you have to apply for if you want to not make your mortgage payment. Not everybody's going to be accepted into this program, but you have to go to your current mortgage servicer and ask them to allow you to go into forbearance. So now, how is that going to affect the mortgage market? It's really, really, really going to put a pinch on your mortgage servicers. So if, whoever holds your mortgage, if it's Mr. Cooper, if it's United Wholesale, if it's Quicken Loans, I think those people, those servicers are really kind of scared right now because, they have to still pay the bondholders their payments every month. So if their customers, say Quicken's, collecting $5 billion worth of payments every month, and then passing that $5 billion of payments off to the bondholders, right? Well, now if they have a bunch of borrowers, say it's 20% of them that have forbearance, that would be their income now goes from $5 billion a month to $4 billion a month. However, they still have to send the bondholders the $5 billion a month. So what that would do to that servicer is they would just start bleeding cash, right? So they'd be literally losing $1 million in liquidity or $1 billion of liquidity in every month. So that's what's kind of scary right now. I think we're going to see some solutions for that. But again, that's more, that's going to be a secondary market type thing. We're going to have to see what happens. But that is a big concern right now, is the servicers really just getting smashed if forbearance happens.
Okay, wow, that makes sense. Okay, so I just have a couple more questions here. Real quick, while we answer these last couple, if we missed anything or you guys thought of anything else, maybe it's unrelated. If you want to throw that in the chat, we'll make sure to get to it. But I do want to get wrapped up and let you guys get on with your days. Couple last questions, like I said. So Chandler, this one's from Amy. Do you think land contracts will increase in popularity for buyers given the current economic situation?
Yeah, obviously it's a big if on what does happen to the market. Land contracts have seemed to become less and less popular with how much of a seller's market as it has increasingly become over the years. So I know we kind of all talked about the supply and the demand and the leveling out of the supply to the demand. And if we see that happening, you commonly do see more land contracts in a buyer's market because the buyers have the leverage. So those who cannot get financed have the leverage at that point to get financed through the seller. So if it does become more and more of a buyer's market, in theory, buyers are going to have more leverage, which in theory would create more opportunities for more creative financing options, which does include land contracts.
Okay. So Dave, real quick, this question's a little bit long and I want to make sure it makes sense. So this question is from Fred. If someone is wanting to sell or buy ASAP, but one income is suspended and they don't qualify for unemployment, but is expected to get back to work as soon as these restrictions are lifted, what will lenders require to prove income and qualify them for a mortgage? Is it going to be 2 pay stubs or what will it look like? Will they be able to immediately qualify with some other proof of employment? You may want to get Tom's opinion on this too.
Yeah, I was going to say, I think that's a question for Tom. I think Tom will give us a much better response. I'm not sure how to answer that really. I think it's more of a financing question.
Okay. Sounds like Debbie asked something similar to this as well. So Tom, what do you think?
Sorry, Janae, I thought that was going to Dave. So just summarize it for me real quick. What's the question?
So basically, if someone's wanting to buy or sell ASAP, but one of their incomes have been suspended and they don't qualify for unemployment, but of course they're expected to get back to work as soon as these restrictions are lifted, what are lenders going to require to prove income and qualify for a mortgage right now?
Great question. Underwriting guidelines really haven't changed in that respect. If we're using income on your application to qualify for your mortgage, right? So if you say I make $5,000 a month, and that's from my paycheck at GM, and then if you get laid off, that goes to zero. So to answer your question, if you're laid off, it's going to significantly impact your ability to get a mortgage. You have to have income for your debt to income ratio. And if you don't have a job or you've been laid off and you don't know when you're going to come back or you've been furloughed, you're sitting on the sidelines. You're not going to be able to be approved for a mortgage.
I'd recommend reaching out to your lender, whoever you're pre-approved with. Reach out to them, be transparent. They're getting a lot of those phone calls right now, and they'll be able to point you in the best direction for you to be able to take advantage of buying as soon as possible.
Yeah, Danny, what we're doing is we're talking to a lot of those people right now that have been laid off and they wanted to either purchase or refinance. And we're just simply, bringing them into our database, putting them in our loan tracking system, and it's going to continue to send them updates on where the market is and what's going on. And then, once they get that first paycheck again, or once they know they're coming back, they flip the switch and then we can jump in and do our job. So yeah, get on the list if you'd like to.
That's what I was wondering, Tom, is the wife cuts hair and she's just not allowed to go back to work until the restrictions are lifted. So is the lender going to look at where they ended before all this happened and take right off as soon as she returns, or does she have to have some proof of her income again?
So is she a W-2 employee or a 1099?
1099.
So if she's 1099, that's easy. We're just going to look at past tax returns, right? So I wouldn't if we're trying to use her income and we do need her income for the mortgage.
Yes.
Okay, so if we need her income from the mortgage and she's 1099, I haven't seen any lenders come out with overlays on 1099 people yet, because who knows when a 1099 person's laid off or furloughed or whatever. You just don't know. So as I understand it currently, we would just be looking backwards at the tax return. So I think you would still qualify for the loan, because it's not W-2. Big difference between W-2 and 1099.
Cool, thank you, Tom. Great question. Okay, so I just have 2 questions left. This next one's for Dave. It's from Elena. Do you think we will see a surge of listings after everything gets cleared, or do you think it'll take a few months before everyone feels more comfortable listing their home again?
Great question, Elena. I think we're going to see a surge, definitely, just because of pent-up demand, right? You've got sellers who had plans on selling and you had buyers who had plans on buying. And so regardless of what kind of market we're in, people always have a need to buy or sell. And so the people that had plans on selling for whatever reason, whether that's they wanted to or they have to or they're getting relocated or whatever the case may be, that aren't necessarily listing their home right now, once things kind of clear up, I think we're going to see a big spike in inventory and hitting the market for sure.
Hey, Elena, on that note, so I completely agree with Dave that we'll see a surge in inventory once we're allowed to fully do everything again like we're used to doing in our lives, right? But I believe that that initial surge will all get absorbed. So I'm saying they're not gonna sit on the market. There's so much demand that those new listings will sell. As long as they're priced right, they're gonna sell really fast. I think you'll see the lag time in getting supply to equal demand. And no one knows how long that'll take. The early adapters to listing should net the most amount of money, in my opinion, because again, they will be beating the herd to it.
Okay, awesome. That's a great Great question, Elena. I have one last question, kind of to summarize all of this, and it's for Danny. So Danny, how do we get through this economic shift together? What do we need to do? How do we come together as a community? What do you think?
Doing what we're doing right now, right? Bringing together ideas and sharing, and like part of like my responsibility, I feel like, is just talking to everyone that I know and just helping uncover the needs that people have, right? So there's people out there that are in a tough spot right now, and then they are not sure which direction to turn. That's on us to help identify what options that they have and pull through it. Obviously, the first responders and medical professionals, they're the ones that they're doing everything they can to stop the virus as quick as possible. We're not professionals on that side, but we can help people on their financial challenges that they're going through right now, and just be a resource all the way around if we can.
Awesome, absolutely. Okay, well, I think it's time to wrap up. You guys have given us an hour of your time. It's getting sunny out. I know we could all use some fresh air for sure. We hope this was super insightful for all of you. I want to give a big, big thank you to Danny, Tom, Chandler, and Dave for instilling all of their knowledge in us today. Thank you guys all for participating and asking all those questions to keep the conversation going. If you have any follow-up questions or looking to talk with one of these guys one-on-one to talk a little bit more about your personal situation, you can email any of them. Their emails are all just their first name at mirealteam.com, or you can also find their direct contact info on our website under About Us. They're all there. We did record all of this, and we're going to post it later on Facebook and YouTube if you guys want to reference it at any point. But we really appreciate all of you being here. And if there's anything at all that we can do to help support you, your family, our community, please ask and reach out. We want to be here for you. We want to provide as much value as we possibly can. And we want to get through all of this together. So everyone have a great day. Thank you again very much. And stay tuned for more like this. Thank you, guys.
Thanks, everyone.
Thank you, Janae, Danny, Dave, Chandler.
Thank you, Kevin.
Thanks for tuning in, Kevin.
You guys are great.
Thanks, Duffy.
Thanks, guys. See ya.
Bye, Ash.
Thank you. Have a great one.
Janae, have any other questions come through?
Have any?
If the questions are still coming, I'd be happy to stick around.
Okay.
Came through.
There's one right now.
Okay, cool. Yeah, Megan's been monitoring them for me. So, yeah, go ahead. Larry McKay has a question. He put in his phone number. Oh, and then there's a couple of them.
Let's just go, because it looks like Larry's still on, and he did send a follow-up message. So what's Larry's question?
Larry says if there's anything in the stimulus bills that help the landlord that is no longer receiving rent or land contract payments.
If you go on sbc.org, there's a link where you can apply for, it's the 7B program. That's the only thing I'm aware of right now. And one of the questions on that application is your rental loss that you've received so far. Day by day, this is changing. And I mean, literally the government's changing how this is working every single day. So like when even like the questions on mortgage payments and stuff like that, I think this is going to change so much, but what hasn't changed is they're looking out for the American consumer throughout. Everything that they can do to keep people on their feet, they're going to continue to do. They need to pump money into circulation as fast as possible. That's a fact. because that will save as many small businesses and people and homes and all that stuff. But to answer your question, Larry, I'll give you my phone number right now if you want to have just a follow-up conversation. But I would pop on SBC, right? .org, and start there. But other than that, like they're very renter focused too, right? So they don't want evictions to happen. They don't want foreclosures to happen. So the government's not going to allow people to just get thrown out on the street right now. So it's very complex on what's happening, obviously.
Well, great question. Thank you. If anybody else has questions, Danny's still here to answer any of them. If you guys have anything, or all of these guys, their contact information, they threw them in this group chat. If you guys want to reach out to them directly, I'm sure they're available this weekend, whenever you need, whenever you want to reach out.
Ryan, since